Hello guys, welcome to Eric Mondo Capital, and today we are going to learn about sniper entries on the US dollar versus the Japanese yen. I'm using tradingview.com and we are trading US dollar versus the Japanese yen. And the first thing we are going to do is we are going to look at our economic calendar for us to get to know what fundamentals are there, because the only thing that could knock your technicals out of the game will be your fundamentals. So that's why we start there, and we are going to focus on the US dollar and the Japanese yen. I can see here US dollar and the Japanese yen. We have the Euro CPI which came out today. I can see it here. It came out the same data that it came out last time. It maintained that data. So we expect the trend for the euro to continue with the same direction it's currently in. We have our building permits which possibly have increased. The initial jobless claims which has reduced, and also the manufacturing index which also has reduced. So with the US dollar we have mixed fundamentals. They start at 430, so at 430 we're going to be on the lookout for these fundamentals. Possibly we're going to place our trades past 430 with the US dollar versus the Japanese yen. So we are done with that, and then we go to this other graph here. Let's start with the monthly. You see this will good. If you were to get a buy here, that would be so nice. These are what you call actually sniper entries. Yeah, and so let's start by this. I'm using the monthly time frame. Yeah, and this was March. Yeah, this was March actually. March you experienced a lot. This is a monthly. Let me show you the daily on the same March. Feb, yeah, this is it. So it was a good V-shaped graph. Yeah, it did a V-shaped recovery. You can see it, then went back slowly going down. So let's start with the monthly. So in this monthly, to get those ideal sniper entries, I recommend you use the Fibonacci retracement tool. This is one of the best tools there is out there. Yeah, and for instance, this was November 2015. Let's take our Fibonacci tool and then we place it there, and then we will see our risk to reward ratio. So this is it. So assuming that we track this downfall from November 2015 to September 2016. Now we are at September, and we really wanted to know when we can put our gold sales on where to go next after this. Yeah, so if you look at this general graph, you can see that we have some sort of support here. So we are going to go ahead and put a support right over here, and also another a resistance right over there. Let me change this to green, just like over there. Now we are at our levels here, and which are conquered by our levels here. And I'm not saying that you've met the market at here, so I'm saying that we need to wait so that we can know either it's a break to the down low or a break to the upside. So we have waited, and Now the time has come for us to place our buys or our sells. What do? So we have plotted our Fibonacci retracement here. Now the levels to watch for us to place our sell trades is here, in between these two lines, in between that 8.2% and 61.8%, or 0.618 to 0.382 on this one. So this is the zone to watch ourselves. We can see it has been adhering to it, this zone, yeah. And also one other thing we need to look out is for us to place our general, for us to place our sell orders is also the general trend of things, yeah, the general trend of the graph. You can see from actually 1st May it has been on the descending chart, yeah, the market structure was descending. So I'll personally go for a sell in the long term than a buy. So I'll wait for this couple of months, yeah, to retrace. But anyway, I would also get on this buy by simply looking at, yeah, those patterns and this consolidation point. Yeah, let me add for you guys the stochastic so that probably you can see what I'm saying. Yeah, when you get used to it, trust you me, even these indicators you will not be using them at all. So you can see at this point actually our chart was oversold, so we expected a good buy. So we could have put a buy here on this month, or even at the closing of this month, or at the mid of this month here, yeah. So we could wait for this candlestick to finish, which was October, and then place our trade in early November here, right around this time, because it retested and then went back up to our levels where then we are going to put ourselves. So I'll put my buys here in between this month and then wait until we have a maintaining or rather wait until we have consolidation at our levels, then close my buy orders and then place my sell orders. Yeah, I hope to get what I'm saying. The US dollar was plummeting for better part of this year. Yeah, as we said, the economic outlook of the United States there is optimism, so it's not performing as a safe haven. So people are removing their monetary currency in the form of the dollar in pursuit of other asset class. Yeah, so it's losing its grip as a safe haven. That's why it's plummeting. Yeah, you can see from November to 2015. Yeah, it has been on that decline. Yeah, let's go to the weekly. Let's look at another one on the weekly. Let me move this one so that they don't confuse us. Yeah, so on the weekly, we look at just the trend. How is it doing? The trend, I can see from this point the trend has been increasing. Yeah? Higher lows. Yeah, it's on a decline. It's actually forming almost descending triangle pattern. Yeah, so I'm going to take my support. I'm going to place it right over there, and then I'm going to take an example here, preferably let me take this example here, and also I'm going to put our first support, our 60th support here, or also our resistance. Yeah, support becomes resistance becomes support, depending on the trend you're in. So let me take this point here. So we've found our graph right over here, and we need to know what's going to happen, what's going on. Yeah, and we know that from this point here, yeah, a lower high, yeah, it has been on the increase. So what you're going to do is you're going to take our Fibonacci. Now let me take our long position so that we can also know how it work. Yeah. So that's it. Yeah. Yep. And also we take our Fibonacci retracement. Then we check our Fibo. Remember, it's not a must that our levels will be hit. You can see by the look of this, it actually didn't even reach 0.38 or 0.618. Yeah, it consolidated as it formed an ascending triangle. Yeah, you can see on this point going up and up as this remains the same. By that I mean this, like that. So this is our ascending triangle. This is also another good way of getting into a trade. Yeah, you wait for it till it forms the least minimal lower high for the next low high in terms of 1, 2, 3, 4. So the fourth low high, you get into your trade, and then it rises up to here. So those are almost 24,000 points, which is 2,400 pips. Yeah, you can see the risk reward ratio was 1.88. So a dollar would give me $1.88. That's how we do it. Yeah. So generally, that's how our sniper entry. Yeah, and you can also wait for those, especially it's sweeter if you wait for those aggressive movements and then go inline. If the market was going up and the long-term trend is going up, then you notice an aggressive bearish trend, that is, it's going down aggressively. Then what I normally do is I wait for that sell to end, and then you place your buy on. This is an example of a sniper entry I took yesterday. I've already closed this trade. Yeah, you can see it fell down as it was going up. It was retracing. I took a buy. Yeah, it also reached the oversold position, so I took a buy. And then I'm going up today at almost 2 a.m. Yeah, gave me the three, we call them the three witches or something like that. Yeah, 1, 2, 3, meaning on an uptrend when the three witches up here, it means that there will be a slight reversal on that trend, but after they're done, there will be a continuation of the trend, which is exactly what happened. So after the third one, I took a second trade here. Yeah. So as long as you are able to connect the dots, trust me, you will have it. Just be patient with yourself. Yeah. So cheers. See you in the next video. Yeah. So that's essentially how it's done. So you can follow us on YouTube at Eric Monda Capital, at Twitter at Monda Capital, and also at Facebook at Eric Monda Capital. You can leave us a message at www.ericmondacapital.com. Yeah, we have good merchandise there for you guys. Yeah, we have some good other products there for you guys. You can pass by the website and check them out. Yeah, so we'll have a part 2 and also sniper entries with other currencies as well. Yeah, but try and use the Fibonacci as you see. Yeah. So cheers guys. Let us